Hello traders, and welcome back to another market review brought to you by Orbex. So it seems that the early worries about the Fed's independence and all the crisis going on around Congress at the moment with Fed Chair Jerome Powell not knowing if he's going to have a job in May, this has been shrugged off, and losses have been recouped by the Dow and S&P, especially yesterday, after they had a bit of a slide in the early session, but since then have closed on record highs again. So it looks like that the gift that keeps on giving in the US stock market and indices is progressing, and we could be seeing this for some time ahead as well. So on the intraday chart, we're looking at the Dow because we're just seeing now prices, as I said, start falling from last week, and we had a bit of a choppy road. But from the early morning session yesterday, we did have a bit of a pullback in price action and a few worries. But since then, as you can see here, just topping another record on this spike and heading towards the magical number of 50,000. Will we get there anytime soon? Well, it does depend on if the Fed is going to be a little bit more aggressive in its rate cutting. Are we going to see more of a purpose than last year, where we were a little bit hesitant, and we did get a couple of rate cuts at the end of the year, but it was possibly a little bit too late because job numbers aren't really setting the world on fire at the moment. We're seeing now that NFP numbers are really down. Inflation is supposed to be a little bit more calm this week, but if it does start popping up to above 3% again, then we could be in a lot of trouble, and the Fed will have a lot of headaches going forward, because we don't know if they're going to start cutting, if they're going to hold back, or possibly even increasing. This will be quite a detrimental sight for the Fed, because they need to get the rates cut, and obviously they're going to have Donald Trump on their back as well, that they have been doing for the last year. So with the Dow focusing on that, we're just basically now waiting to see if we're going to have a confirmation above this particular double top here that we've seen on the spikes on the higher wick of the candles, because that will be a big indication if we're going to start pulling towards 50,000 or not, and what a momentous achievement that will be for the Dow. If we go back to just this time last year, we were trading very vastly, very heavily under, well, since this other correction as well, we were trading in the lower regions of 40,000, so some 10,000 points, over 10,000 if you add this correction in as well, being added in 12 months. It's just outstanding, really. But let's just take a look on the S&P as well, because that has again momentously shifted again and again higher, and we're just seeing now another record high. This is actually more of a cleaner break because of these bullish intraday candles that we've seen time and time again, 6 in a row now, and it doesn't look like it's going to slow down anytime soon. But as always, we do look at all the overall technical picture of the market, and the RSIs and the stochastics as well are telling us that there could be a bearish divergence being formed soon. So there could be a bit of a slowdown in price action, like we've seen before when we had these peaks here, that the price action has been starting to fall. But at the moment, hitting another record and just seeing if we're going to go above 7,000 for the first time. Just kind of teetering on the brink now, a few points below that. So we're looking likely that it will be tested. Whether we'll have a confirmation break today or not, we'll have to wait and see. Obviously, inflation data will be very critical, because that will give us more of a response of where the Fed is going to go next as well. But as always, we'll bring you all the latest in fundamentals and technicals as they come. So stick with us there. Hey, trade responsibly, and we'll speak again next time.